In this video, you will learn the best RSI trading strategy. This is not the traditional RSI trading strategy that most of you are used to. But in this video, I'm going to share with you my secret RSI trading strategy, which I have backtested. Honestly speaking, this strategy is doing extremely well. So that is what you are going to learn in this video. So the best thing you can do for yourself is to make sure you watch this video from the beginning till the end. Don't skip any, because you are going to learn valuable information from this video. So before we start, let us look at the meaning of RSI. RSI is a popular indicator used by so many traders all over the world. So this indicator measures overbought and oversold condition of the market. In other words, it is what an oscillating indicator that ranges from 0 to 100. So many traders use the RSI to measure overbought and oversold condition. It also helps us to know the strength of the market. So what is RSI? RSI stands for Relative Strength Index. So it is a popular indicator that helps traders evaluate the strength of the current market. It helps traders to do what? To evaluate the strength of the current market. And it also helps to identify an overbought and an oversold condition in the market. So RSI is an oscillator indicator that scales from 0 to 100. So, and it also helps us to know when to buy and when to sell. So the range is from 0 to 100. So when there is a reading at 30 or below 30, it means the market is in oversold condition, and so buyers are waiting to enter their buy trade. And a reading at 70 or above 70 is regarded as overbought condition, and sellers are waiting to take their sell trade. And so that is why we say the RSI measures the strength of the current market. So for you to be able to trade the RSI extremely well, you need to understand what the market structure. RSI works extremely well when the market is in a range. If the market is in a range, RSI works extremely well, because the overbought and the oversold condition will be acting as support and resistance level. So apart from the 70 and the 30, because the 70 is regarded as the overbought, while the 30 is regarded as the oversold. So apart from these two, there are 50 also. So the 50 level is used to identify what the difference is between uptrend and downtrend. So if the line is above the 50, it means the market is in an uptrend. And if the line is below the 50, it means the market is in a downtrend. So the 50 will help you during a trending market, because if the market is trending, the RSI indicator will not work perfectly well as it used to work during a ranging market. Because if the market is in an uptrend and you decide to sell at overbought condition, you might get so many stop, because if the market is in an uptrend, the market will be breaking series of highs. So if the market is trending up or trending down, the RSI indicator doesn't work extremely well as it do when the market is in a range. So when the market is trending, that is when you can make use of the 50 level. So what you do is wait for the RSI to come back to the 50 level for you to take your trade. So in this case, the 50 level will be acting as support and resistance level. So that is how you can trade using the RSI indicator. And like I said, if the line is above the 50, it indicates that the market is in an uptrend, and if the line is below the 50, it indicates the market is in a downtrend. And if the line enters into 30, it means the market has entered an oversold condition. And if the line enters 70, it means that the market has entered an overbought condition. So these are how the RSI is being created for us to be able to trade it, identify overbought and oversold condition. But so many traders use this 70 and 30 and still get so many stops, because sometimes the line can cross the 70 and still keep going up. So that is why I have a secret settings that I use, and honestly speaking, this is one of the best settings for you if you are trading using the RSI indicator. So instead of using the 70 and the 30 as overbought and oversold, it is better use 82 and 18. So level 82 is the overbought, while level 18 is the oversold. So with that, you get a few signal, but the signal are very authentic. That is to say, whenever price comes to the 82%, it signals a strong overbought condition. That is to say, the market will definitely reverse, because the market has gotten to the highest overbought condition. So once the market gets to 82, you take a sell trade, and when the market gets to 18, you take a buy trade. So this is how I trade using the RSI indicator. Honestly speaking, you will get few signal because it will take time before the line comes to 82, because sometimes the line reverses from 70, or it takes time. But if you want to get a very powerful signal that has strong win rate, then the 82 and the 18 are the best for you. So that is what you are going to learn in this video. So before that, let me just show you how it looks like. So this is what we call the RSI indicator. This is the RSI indicator, right? So like I say, it is what is an oscillating indicator that helps to measure oversold and overbought condition in the market. So now you can see there are two lines, the red line and the blue line. So this red line is the 70 level, while this blue line is the 30 level. So whenever price comes to this blue line, which is the 30 level, it signals what? An oversold condition. That is to say, buyers are waiting to take their buy trade at this level, because this is where buyers are waiting. So when the line, the RSI line, comes to this 30 or crosses below this 30, this becomes an oversold condition. And like I said, you don't have to take a buy trade once this RSI line touches this 70. So you mustn't take a buy trade when this RS line touches this 30, this blue line. You have to draw another line, which is 18, and wait for this RS line to touch the 18. So once it touches the 18, you take a buy trade immediately, because once the RS line touches the 18, that gives you a strong indicator that the market will reverse. Even if the market is in a downtrend, the market will make a retracement, and the retracement is very huge. So before the retracement concludes, you must have gotten what you want. So that is why I don't normally use 30 and 70. So if you are taking your trade when the line touches 70 or 30, you might get stop out, because the market might be in a strong downtrend. But if you want to get a good entry, you need to wait for the RS line to touch 18 if you are buying, or 82 if you are selling. So if you watch, you see that as the RS line comes below the 30 mark, it signals what? an oversold condition in the market. So if you're able to take a buy trade, because this is the candle that trigger this touch, these two candle. So once you wait for this candle to close and you take a buy trade, you'll be able to ride this massive trend. Because of what? If you do a clear calculation here, you see that this point where this line is, this RS line is the 18, because it has already crossed the 30. This is the 30. This blue line is the 30. It has already crossed the 30. So this, if you draw another line, you see that this point is 18. And like I said, this is the lowest that it can go before it makes a retracement. Even if the market is in a downtrend, it will definitely make a retracement before the downtrend continues. So that is why once the line, the RS line, touches the 18 when the market is in a downtrend, I take a buy trade immediately, because that is the beginning of a retracement before the downtrend continues. So this is how I trade using the RSI indicator. So I'm going to head straight to trading view, and I will show you how you can trade this strategy profitably. So this is trading view, and we are going to use gold for this example. Have it at the back of your mind that this RSI indicator works in all time frame, but the higher the time frame, the stronger the signal. But it works in all time frame, whether you are using 4-hour time frame, or you are using 1 hour time frame, or 30-minute time frame, or 15-minute time frame, or even 5-minute time frame. It works in all time frame, but the higher the time frame, the stronger the indicator. So I will advise you to use the higher time frame. For day traders, the 15-minute time frame is not bad. You can use the 15-minute time frame as day traders. Once the line comes to level 82, you take a sell trade, and when the line comes to level 18, you do what? You take a buy trade. For day traders, I think 15 minutes is good to go. But if you are a swing trader, you can go with the 4-hour time frame or the 1 hour time frame. So before you do that, you have to first and foremost look at the pair you are trading. So we are trading gold, and we are going to use the 15-minute time frame as day traders. So we are using 15-minute time frame as day traders, and we are trading gold. So after that, the next thing is to go to the indicator. You simply click the indicator, and then you look for RSI, relative strength index. So simply search for it, RSI. Now this is it. You simply click it once, and then it comes out. So now it is out. So this is it. This is what we call the relative strength index. So once it comes out, you see that it came with so many lines, right? So what you do is you go to the settings so that you make it be understandable, so that you can be able to read it. Go to the setting. So once the setting pops up, then the period is going to be set at 14. So we'll now go to the MA, will be the simple moving average. We'll leave it that way. Then we'll go to the style. So we want to remove this yellow line. This yellow line, we don't need it. So we want to remove it because we don't need it. We have to just click this, and the yellow line is gone. So we now have only the RSI line, which is this blue line, and this is period 14. That is the setting we are using. This is it, period 14. So this is it. So now what I'm going to do is to change the color. If we want, I might change it to blue. Change the color to blue. Okay, you can see that the color is now blue. Then what do we do again? We come back to the style. Now we look for the overbought and oversold. So this is it, the upper band and the lower band. So what we'll do is this, we simply change it to black. Change it to black. Then the lower band, we also change it to black. Okay, we make the middle line visible, which is the level 50. We make it visible so that we can be able to see it. We make it visible. Okay, so what else are we setting? So the upper band, also make it bold. Then the lower band, we also make it bold. Make it bold. So this is the setting I'm talking about. The default setting for the upper band is 70 and the default setting for the lower band is 30, right? So if we say, okay, let's leave it like this, you can see that the price is breaking above it. You can see the 70, you can see that the RS line breaks above it, right? So you can see, you can also see the 30, you can see that the line breaks below it. So what we're going to do, for us to get that sniper entry, we have to change the setting of the RS line. We have to change the setting. So we'll go to style, we simply click on it, and then we change it to 82, and we change this one to 18. So we'll leave the middle at 50, and then we'll click OK. Now you can clearly see that now we now have a good, perfect setting for the RSI line. So now this is the middle band, which is 50. This is the upper band, which is 82, and this is the lower band, which is 18. So if you watch, you see that it takes time before this RSI line comes to this upper band. It takes time. So that is why you can use it in multiple pairs. You can't just rely on only one pair, because it takes time depending on the time frame you are using. Like this is the 15-minute time frame, so it takes time for you to get a signal. So that is why you don't need to use only one pair. You can trade so many pairs so that you can get different trading opportunity. Because like I said, once the line, this RSI line, touches this 82, it gives you a stronger indicator. The indicator is very, very strong compared to if you were using the 70 as the overbought condition. So if you watch here, you see that as the RS line comes very, very close to touching the 82 level, you can clearly see it, right? So this is where you take a sell trade. So you can clearly see as the market was going up, you can see that from here the market was clearly in an uptrend. So if you want to confirm, you can use a trend line, confirm it. You can clearly see that the market is going up, currently in an uptrend. The market is currently in an uptrend, right? You can clearly see it going up, going up, going up, right? So now you are watching the RSI line, this blue line, that is the RSI line. So you are watching the RSI line, and as the market is going up, the line is also going up, right? So for the fact that the line has not come close to this 82, you don't need to take action, right? So if you want to, get more opportunity, you might reduce it to 80 and 20, because if you check, you see that the 82 is far from the market. So let's just do a little tweak. We'll go back to the setting, and this time around we're going to change the 82 to 80, right? And then 18 we change it to 20, right? So now our overbought condition is 80 while our oversold condition is 20. So we click OK. So now everything is perfect. So now we are using 80 as our overbought and we are using 20 as our oversold. So if the RSI line touches the 80 level, we take a sell trade, and if the RSI line touches the 20 level, we take a buy trade. This is the best way to trade the RSI line instead of using the default 70 and 30, because if you use the 80, it gives you a stronger signal compared to if you're using the 70. So like I said, the market was going up. You can see the market going up. We have used our trend line to confirm that the market was going up. So as the market is going up, you can see that the RSI line is going up. So yet we're not going to take any trade until this RS line, so we're not going to take any trade until this RSI line touches this overbought condition, this overbought level, this 80 level. That is when we're expected to take our sell trade. So you can clearly see that this is where the line, the RSI line, touches the 80 level. So this is when we are expected to take our sell trade. So if we plot out this cross sign, we can see that this is the candlestick that caused. So if we use this cross line, you can see that this is the candlestick that we are expected to wait for it to close, because if you watch, you see that as the candle is moving, the line is also going up with it. So this is where the RSI line touches the 80%. This candle is where the RSI line touches the 80%. So what we're going to do is, as we have confirmed that the line has already touched the 80%, and this is the candlestick that caused this, so we simply wait for this candlestick to close for us to take our sell trade. So once this candlestick closes, we simply take our sell trade at the close of it. Simply take our sell trade here. This is what we're going to take our sell trade. Let me change the color so that you understand what I'm saying. Change it to black. Okay, so this is the candle that closes as the RS line touches the 80 mark, 80 level, right? You can see the line touches the 80 level, and this is the candle. So simply wait for this candle to close. We place our sell trade here, and then our stop loss is going to be above the swing high, which is, this is the swing high. Our stop loss is going to be above it a little, so this will be our stop loss. This will be our stop loss, and where is going to be our take profit? Our take profit is going to be at the previous swing low. So this is the previous swing low. So this is going to be our take profit. So this is it. This is where it's going to be our take profit. Previous swing low is going to be our take profit, because that is where the market can reverse from. So we are going to take our profit at this swing low, because this is where the market is likely to reverse from, right? So this is where we are going to take our take profit, because that is where the market can reverse from. So you can clearly see the market now went down and then smashed our take profit before it continued going up. So now if you watch clearly, you see that as the market was going down, you can see the long red candle. You can see how long this red candle is, right? So remember that RSI is being measured based on the strength of the current market condition. So as you are seeing this long red candle, your attention should be focused on this line, because if this line comes close or touches the 20 level, that is what we call an oversold condition, because it came quickly, so fast. Because if you watch, you see that the red candle is so long. Look at the first one, look at the second one, and look at the third one, right? So if you watch, you see that if you are watching the market, you see that At this point, this line has already touched this 20 before this rejection. So if you watch clearly, you see that these red candles are so large. They are so large. You can see how large they are. See this one, see this one, and see this one. And you remember that RSI line measures the strength of the current market to be able to determine an overbought and an oversold condition in the market. So if you watch clearly, you will see that the red candle are very, very long, very extremely long. So what you should be looking at in this scenario is this RSI line. So as the red candle is dropping, you can be watching the RSI line. So if you watch, you see that this is the red candle that must have triggered this RSI line to touch this oversold condition. So if you watch clearly, you see that as this candle got to this point, the RSI line touches this oversold condition, which is this 20, and then this rejection then makes it to come up again. So if you watch clearly, you see that this is the right time to take a buy trade because of this rejection, because this is the rejection that, because if you watch, you see that as the market went down to this point, the RSI line touched the 20 level before this rejection. So if you were not there when it touches it, you can simply wait for this red candle to close. So once this red candle closes, you take a buy trade, and your stop loss will be below this wick, because in this scenario, this wick is now acting as what, as a support level. So in this scenario, your entry should be here. This should be your entry, and then your stop loss should be below the wick. Your stop loss should be below the wick, and where will be your take profit? Now your take profit can be here, right? Because this is a swing high. Your take profit can be here. This is a swing high, or here. This is another swing high. This is it, right? So you may have to take profit if you are entering two trades. The first take profit will be at this swing high, and then your second take profit will be at this swing high, right? So you can clearly see that the market now went up and then smash your first take profit, right? So, and then went up again and then smash your second take profit. So you can clearly see that this strategy is working perfectly well. Okay, this is another example. This is another example again. You can clearly see from here the market is in a downtrend, right? You can see there are series of red. The market is clearly in a downtrend, right? So you can watch and see that this RS line is going down, but when it got here, it hasn't come close to this 20 level. So you don't have to do anything yet, because you are waiting for this RSI line to touch this 20 for you to take a buy trade. So you can see that the market went down and the RSI line went down too. So you can see that the market was going down, the RSI line was also going down. So this is the point where the RSI line touches the 20 level, right? So this is where it touches the 20 level, and this is the candle that caused it. This red candle is the candle that caused the touch. So now you've seen that the RSI line is already at the 20 level. That is the oversold condition. What you have to do is to simply wait for this red candle to close. You simply wait for this red candle to close, and once this red candle closes, then you place your buy trade. So your buy trade should be here. Just immediately the red candle closes, that is where you are expected to place your buy trade. So your buy trade should be here, and then your stop loss will be below this level. That should be your stop loss. So your stop loss should be tight. Don't risk more than 20 pips if you are a day trader, so as to get a better risk reward ratio. So now that your stop loss is here, you cannot look at the market to see where the price can reverse from. So we can clearly see a support level here, which will act as a resistance level. So this is where the market can reverse from. So you can clearly see it, because formerly this level was acting as what, as a support level. So we believe that this is where the market can receive resistance, because formerly it was acting as a support level. So that is where we should be waiting to take our profit. So as you enter your buy trade here, your stop loss below, then your take profit should be at this resistance level, because formerly it was acting as a support level until the price breaks below it, and we believe it's going to act as a resistance level, because as usual, if price breaks below a support level, that support level automatically becomes a resistance level. So this is how I trade using the RSI indicator. And like you have watched in this video, instead of using the default 70 and 30 in the RSI, I had to tweak the setting to 80 and 20. I had to change the overbought level to 80 and the oversold level to 20, so that I will get a higher win rate. Because if you watch the videos clearly, you will see that it takes time for the price to come to the 80 level. So whenever price comes to the level of 80, I take a sell trade, and whenever price comes to the level of 20, I take a buy trade. So this is the strategy that I have been using. I've done a thorough back test on this strategy, and it is working extremely well for me. So the advice I will give to you is to make sure you back test this strategy on your demo account before using it on a live trading account. So if you are able to do that and the strategy is working perfectly well for you, then you can implement it on your live trading account. And like I said, don't trade without stop loss, because no strategy is perfect. There is always some potholes. So that is why you need to have a stop loss and have a good money management. So forex trading is unpredictable. Everything will not happen 100% of the time. Sometimes the market will just try to test us. So that is why you need a stop loss in case if the price or the market goes against you. So ladies and gentlemen, that is all I have for you in this video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Goodbye.